Good afternoon. Welcome to the TheoTRADE afternoon video. I'm Blake Young. Today is January 18th, 2029, and we're going to discuss, did today's volume signal new record highs ahead of sentiment? Tomorrow morning, about or before the market opens, we'll have consumer sentiment. Consumer sentiment is a survey, but it tries to track whether consumers, which are the blood force of the economy, are confident or not confident in the future of the market and future of the economy. And really, that's an indication of how they will spend. That's the idea anyway. So that report is coming out tomorrow. We'll get to that in a minute and show you some of the numbers that we're looking at. But in response to that, or in response to the market today, rallying up through here, we see we had a very positive day in the S&P 500. We're up about 1%. Volume was higher than normal. Now, I did put this indicator on. If you go to studies, edit studies, and I've shown this in the main room multiple times. If you go to moving average envelope, I've added a moving average envelope 10 days, which is 2 weeks of trading, 50% above to show 150% of normal, 0% above average, which is just average, and I've changed the price high and low to volume. And that just tracks volume from a 2-week time period, kind of a moving average of 2 weeks volume. So today's volume, as we finished out today's trading, we were at an average volume, the red line, of 75 million shares. We traded 90 million shares today, so it's a solid breakout, a solid move higher. Not 150%, but greater than average, and the greatest bullish volume we've had since the first trading day of the year. Good indication that we have some backing behind this movement. Now, this did not reach record highs, but why do I think that we are going to go to record highs based off the volume that is a little bit higher than normal? Well, it's primarily because of the QQQ. If we take a look at the QQQ and take a closer look at the QQQ and its move today, you can see that we had a higher volume yesterday and the day before, higher than average, higher than the sell-off. So on the gap down close up that filled the gap, we retested the gap. On average volume, we gap down closed up on higher volume, and then we gapped up closed higher on even higher volume. Good indication that we have some movement. Well, we cleared the high. We actually put in a record high and closed near the high of the day. Another strong indication. But it's not just this move in the QQQ. It's the overnight move that's happened as well. In the overnight action is what creates this gap. So the U.S. market was being bought in the aftermarket, likely during the European market. If we look a little closer, we'll be able to see it here in a minute. But the QQQ is just representing regular trading hours on the Nasdaq's ETF. If we go to the Nasdaq futures, we can see that the Nasdaq futures don't have that same gap, that same space in between. We've pushed higher, and even though it has not put in a record high, the QQQ has. The Nasdaq has reached up near and retesting near the record highs on the highest volume we've had on a bullish day. As you can see, the highest volume we've had going all the way back for the last 6 months. Not a single bullish day with this much volume. We have to go all the way back and reach this peak to get even close. So 826,000 shares traded back on October 6th, and today we had a total of 830,000 contracts. And so record high volume today for the year in the Nasdaq as far as a bullish move here. If we look back, actually we did have, nope, just a little shy right through there back in May. So some of the highest volume we've ever seen, at least in the futures, and pushing up to this record high, likely going to have a follow through. If we look at the intraday will show us that not only did we have this rally, we created higher highs, higher lows, higher highs, higher lows, and then after the market opened, here's the market open at 7:30 my time, we made a high, we made a new low, clearing out all the sellers before reversing and making a new high again. I would treat this expansion as one, volatility, but two, clearing out whatever sellers thought they could push it below 16,985 or 17,000. And so the sellers lost, and we pushed it all the way back up. The recovery went from about 942 up to 125, and so 200-point move in the pullback. But from just 2 days ago, we went from 16,689, we'll just call it 16,7, to 17.1, and we've seen a 400-point increase in the Nasdaq. Now, why am I focusing on the Nasdaq so much? I'm focusing on the Nasdaq because the Nasdaq is made up of tech stocks, and tech stocks are our biggest push behind the markets currently. As we know, using the Market Watch Visualize, we know that the market is made up of the Magnificent Seven. And we can see that Google, Meta, Nvidia, Microsoft, Apple all had amazing days today. Amazon, bullish days, 1.18%, 2%. Apple up 3.26%. So when these beasts, these monsters, these Magnificent Seven all have amazingly strong days on high volume, they will continue to feed that rally when we look at the other indexes. So if I go and look at the S&P 500, there they are again. So the fact that the Nasdaq or the QQQ reached a new record high, the fact that the Nasdaq NQ futures had the highest volume we've seen during the year, and that is being driven primarily because of these big tech stocks, that's going to lift the S&P, and the S&P should be able to reach a new record high as well. Now, what doesn't have the big tech stocks? The Russell. If we look at the Russell, where is it? There's no Apple, there's no Nvidia, there's no Microsoft. They're not in the small cap Russell. So the Russell is going to have a little bit different response. Looking at the Russell chart, you can see it had a bullish day today, but it barely came back to test yesterday's high. It didn't really recover. It didn't really push to go towards record highs. It didn't create a new high. It didn't create a new higher low. It simply bounced and tried to offset yesterday. The Russell could still have bearish movement, and part of the reason why I think that it could have bearish movement as well is because we're still watching for the better, clearer indication of whether we're going to cut rates or leave rates unchanged. If they leave rates unchanged, or even more so if we raise rates, then the Russell is likely to go back to retest its 6-month lows down near 1700 in the next month, maybe a month and a half. And so the Russell is not being lifted by the monsters of tech or the Magnificent Seven, and could be seeing new 6-month lows down near 1700 in the next few weeks to a couple of months. But that's because it doesn't have the same items that lift it. We don't see a lot of spending from consumers in the Russell either. Let's go take a look, not as far as comparatively. Let's go take a look at that consumer sentiment indicator and macro report. I'm on Forex Factor for this, and you can see we have preliminary University of Michigan consumer sentiment. Previous was 69.7. We expect it to come in at 69.8, but it's not just that it's a higher number. And it's not a perfect percentile either, just so you're aware. It can go past 100. But generally, the idea, the concept is anything above 50 is confident in growth, saying roughly about 69 to 70% of the people are confident in the current economy and the future of the economy. And as we look at this, it's not just that. We can see we dropped down to 50%. 50.2%, and from there we made higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Now, can we get to higher highs again? If so, we could be looking at consumer sentiment rising to 80, 82, 85, maybe even all the way up to the 90s that we haven't seen since pre-pandemic lockdown. And if we see that trajectory move higher, then consumers who make up about 65% of spending will be feeding into the economy and the continued growth of the economy. And it could be the perfect storm for the Goldilocks scenario. And consumer sentiment could be one of those driving factors. So normally we wouldn't worry too much about this report since it does a survey, but we are seeing the pattern emerge that the consumers may continue to spend. As long as they have the money, they will continue to spend and lift the economy further. The other things that I think support a continuation higher, which is what we're seeing even in the after hours right now, is that bond prices are selling off. And if bond prices are selling off and yields are going up, it's not that the yields are going up is the issue. It's that the bond prices are falling, which means that we have a little demand to a flight to safety. And so if we're seeing the bond prices drop, we're not rushing to be safe in a return on ZN, which is also the reason why we see utilities in the defensive sectors selling off as well. So utilities are way down today, and we've made lower highs and lower lows. We've gone from 67 down to 61, so a 10% decline in utilities over the last few weeks, pushing lower and lower and lower. So major sell-off and major drop down here in utilities. Now, consumer staples and healthcare also struggled today, but they were just refilling the gap. You can see that we gapped down and recovered. So on good volume, on average volume, we barely got back up to retest the gap, back to fair price on healthcare and consumer staples. If we're not concerned, we're not rushing into those safety places or those defensive sectors, and you can see that consumer staples really didn't have that great of a day either, finishing the day down 0.12, really flat on the day. Gap down, traded to the open, didn't fill the gap, but traded back to the open. So we're not seeing that flight to safety. And if we're not seeing the flight to safety, we're seeing the Magnificent 7 push to the record highs. We see 130 to 150% of higher volume in the major sectors and the indexes. We're likely to push to a new high. Now, that doesn't mean that we're going to be able to sustain that, especially if we keep rates high, if we see that squeeze the market a little bit, but it definitely looks like we're heading for new highs, at least with the behavior the market's showing with volume. And if I were to give a target on the S&P, I think it'll target this roundy, 4,900. So if we can clear the high, likely tomorrow, clear 48.37, the previous highs, or 48.41, the record high, then we are headed to 4,900. And I think we could probably get there by tomorrow, if not beginning of next week. Well, that's going to do it for me today. Thank you for watching, and we'll look forward to talking again next week.